Do you want to know how to get your credit score higher? I've got my top 3 tips coming up next. Hey there, this is Ryan Skaggs, and this is the Mortgage Minute. This channel is dedicated to everything mortgage, real estate, and interest rates. And we're going to dive into those interest rates first because I've got some great news. We have now fallen for the average 30-year fix, fallen down to 4.99. We're below 5% for the first time in a very long time after this very quick rise in 2022 with interest rates. Now, here's the bad news. There's always two sides of the coin, right? Just since I'm making this video Friday, August the 5th, we've definitely seen rates move back up just over the last few business days. This chart, and I'll link below to the Freddie Mac average 30-year fix, which is what I'm giving you as a 4.99 across the country, is from the week prior. It comes out every Thursday. And therefore, that data is kind of from earlier this week and last week. Now coming into later this week, we're going to likely see rates move back up. Time will tell on what that actually looks like. But long story short, the trend has been to kind of normalize. Now, we have seen still a lot of volatility in the market, these ups and downs in rates, but we're no longer looking like we're just on this constant uphill battle with rates. So again, that link is below. You can check out the weekly or average 30-year fix from week to week per Freddie Mac. While you're down there, hit that like button, hit that subscribe, and click that bell icon to be notified as I'm putting out weekly videos on the channel. Now, let's run through the top 3 tips on credit scores, right? So in this week, I'm just going to give you kind of the 3 easiest ones, not really break down, as I'll try to link to maybe some other videos I've done on the topic of credit scores. But this one, if you saw from my cover or my thumbnail, Equifax actually miscalculated the scores for many individuals looking for mortgages, looking for auto loans, personal loans, things like that. And what it kind of meant to me is that we are never going to know how it's calculated. They're not going to give us 1 + 2 + 3 = 6. They're going to basically, under cloak and dagger, say our proprietary system spits out a number. Now, what I can tell you from over a decade of experience on how to increase that credit score or to be able to put yourself in the best position is, first and foremost, my biggest and number one that people usually don't do is pay off the credit cards mid-statement. So if your statement cycle runs for 30 days, at about day 15, you could pay your card down to 0, assuming you're not carrying a balance. And then that last 15 days, you would have a much smaller balance when that statement comes around than if you just let it go till the bill came out. And really what you're trying to do here, and this is tip number 2, is keep your spending below 50% of what that maximum allowable amount on that credit card is. So if you have a small credit card with a $2,000 max, do not spend more than $1,000, right? If you can keep that spending under $1,000 on that card, or that balance under $1,000, you're going to likely see that credit score go up over time. Now, my very first tip, pay that mid-statement. Let's say you have some bills and it's going to be $1,200 or $1,400 on this card, but it's only a $2,000 limit. Well, if you pay it halfway through, let's say you had a $700 or $800, kind of bill that was due halfway through. If you pay that off, if you're able to get that back down to 0, then you build it back up to say $700 or $800. When the statement comes out, you're only going to be at $700 or $800 on a $2,000 bill. And again, you meet my tip number 2 of being less than 50% overall. I see this constantly. People have 5 credit cards, but they only use 1. And it's only got, say, a $5,000 limit, and they're putting a vacation on it and something else, and it goes up, the balance goes up pretty high, but then they pay it off. Well, when that statement runs and said, you have a $4,000 balance on a $5,000 credit card. Now, that gets sent into the bureaus, and they're going to evaluate that you're using 80% of that card, right? And that's why likely, and again, cloak and dagger, they're not going to tell us exactly, that score is going down. And that's what I've seen from my experience. Now, if you want to be able to see where your credit score is, what you might be able to afford for a mortgage, things like that, definitely you have to apply. You have to get credit qualified to see where you'd be. Now, number 3, and this somewhat goes without saying, but when we're talking about credit scores, don't pay cash. Don't pay cash for everything or a debit card. You have to build credit to be able to get your credit score up, right? I completely understand being debt adverse. I am very debt adverse, and yet I'm do mortgages for a living. So I completely understand. I always try to help and coach clients of, hey, I'm going to help you get into debt, but I'm also going to show you how to get out of it as well, right? So don't pay cash though. Like, I understand the concept of, being debt adverse and not wanting to get into debt, but be able to build credit. Use that credit card, pay it off immediately, pay it off week to week. Don't get a balance running, but be able to build that credit is going to help you to get better terms on mortgages, loans, things like that over time. So put your comments below. Let me know what questions you have. Again, some good news from the interest rate market. Likely going to switch back to a little bad news next week. Time will tell. I want to thank you for tuning in. Click that subscribe button. I'd be forever grateful to subscribe. Again, weekly videos coming out on the channel. So thanks so much. Be safe, and we'll see each other again very, very soon.